What's up, investors, and welcome back to the channel. Today I want to talk about MULN stock, Mullen Automotive. So, this video is going to be a little different than my usual videos because I have to say what needs to be said. Just look at this chart. Just look at Mullen Automotive's stock price over the past 4 months, going from a high of $16 in November right down to only 50 cents in February. This stock is being shorted to oblivion, and when the squeeze comes, this is going to rip up in the biggest short squeeze we have seen since GME's stock back in 2020. Surely no stock can drop like this without being manipulated, and the shorts will eventually be made pay when they have to cover. After all, Mullen is grossly undervalued now at only $27 million, whereas this could easily be at least a $10 billion company. This is the story that you are being told across StockTwits, Discord, and YouTube. But this story is not accurate at all. For example, this is the post that I've seen on StockTwits just today entitled Simply Criminal. This is the kind of misleading information that you are being shown, and why Mullen Automotive is trending across social media over the past week. After all, Mullen Automotive's SUV the 5 is on par with Tesla models played. Or is it? Is this stock really undervalued? But hold up. In order for me to give you a true account of this company, I need to start with who exactly Mullen Automotive really are and why the stock has got to the value that it is at right now, so that we can assess what share price this stock can actually reach. Is Mullen stock going to gain 100% or even 1000% nasdaq? MULN? Or will Mullen stock drop right back down to 50 cents or go even lower? As always, guys, this is not financial advice, and I'm not a financial advisor. But if you do enjoy this content or find any value in this video, can you kindly show your support for the channel and smash the like button? If you agree or disagree with what I have to say, then drop me a comment and I will reply with some information that will prove one of us to be correct. Now let's get into who Mullen Automotive really are. Mullen Automotive is a California-based EV company that owns and partners with several synergistic businesses working towards creating clean and scalable energy solutions and electric vehicles. Mullen became publicly traded on NASDAQ on November 5, 2021. So Mullen is publicly listed exactly for months today. Now there has been a lot of talk around companies going public through reverse mergers with SPAC companies over the past 2 years, and how most investors rarely get a good deal in these business combinations. But there is another type of reverse merger, and this is how Mullen became NASDAQ listed. Mullen merged with NASDAQ-listed Net Elements Incorporated in a stock-for-stock agreement. This is similar to the deal that we've seen last year, where Meta Materials merged with NASDAQ-listed Torchlight TRCH, and there was a similar type of social media hype around this merger too. But despite becoming listed in November, Mullen is much older than that. Modern Technologies was incorporated by CEO David Michery in 2014 as a successful company from the acquisition of Coda Automotive and Modern Motors Group. Mullen Motor Cars was founded in 2002, and the Mullen GT was the first electric supercar in the market back in 2007 and was named by Forbes magazine as the 7th fastest American producer for 2006. Coda was founded in 2009, and as it says on the website here, an award-winning company that at one point Coda was one of only 2 certified EV companies selling EVs across the US, the other company being Tesla. So I feel that it is easy to say that one of these companies has gone from strength to strength, while the other has not. But Coda was focused on accelerating the adoption of electric vehicles by improving performance, safety, reducing cost, and commercializing production of battery systems built for automotive applications. I need to highlight battery systems here. This is another key point in the current Mullen story. Right now, Mullen have one model, and that is the 5. Now this EV debuted at the recent LA Auto Show and won the top SUV at the LA Auto Show Avis Awards, beating Rivian and Lincoln for top all-electric SUV. Now that does seem to be pretty impressive, and I must admit that this is a very nice-looking EV. But investors need to be aware that this is not yet being produced. Mullen have said that deliveries will begin in the second quarter of 2024, so that is a full 2 years away from now. And Mullen have been very clever in the publicity of the LA Auto Show with the announcement. Due to strong demand at the LA Auto Show, the company has increased the reservation capacity from 5,000 units to 25,000 units. This gives the impression that everyone is looking to buy one of these EVs. This is an EV that has a starting price of $55, but you can reserve one with a $100 refundable deposit through the Mullen website. First of all, $100 is nothing to reserve a vehicle. And if you change your mind, $100 isn't really going to bother most people. But then the fact that this is refundable, why wouldn't you reserve one of these? It costs you absolutely nothing. So that is a red flag for me straight away. But you cannot argue with this. Last month Mullen announces results from a detailed EV market study and conceptual benchmark comparison of the Mullen 5 against two industry-leading competitors, the Tesla Model Y Tesla and the Ford Mach-E F. Again, I have seen this being used on social media to pump this stock and why it is so important to take 20 minutes and do your own DD. Mullen commissioned consulting firm GoGrow to do this survey. This is not an independent survey. GoGrow have been paid to conduct this survey. And, as it says here, GoGrow is an outsourced operating partner for companies with a passion to help professionalize and grow businesses. Their job is to help grow businesses. Again, I find this to be a red flag that Mullen have published this survey with a title that is very misleading for anyone who doesn't actually read beyond the PR title. But this is absolutely nothing compared to the red flags coming up next. It is always important to see what kind of management team are running the companies that you are looking to invest in. So let's look at Mullen CEO David Michery. Now this is something that I found very odd. It says here David brings a wealth of relevant knowledge and experience to the Mullen brand. He has notably created 12 trademarks so far to develop the company's brand and vision. But there's no mention of the trademark here. What are these? Maybe they're looking to keep this as a short paragraph. So I'll move on. He has personally overseen several businesses that totaled over $1 billion in transactions and has demonstrated skill in building businesses from the ground up into successful entities that subsequently sold for hundreds of millions of dollars. So who are these businesses? I'm surprised that they're not mentioned here. Looking at his LinkedIn page, again there is no mention of all these companies, only this one. American Music Corporation. Once more, a red flag. There should be an entire history here, especially one that's supposedly hugely successful. And this is the American Music Corporation's website. Nothing here. Then I found his profile on Market Screener, where there is a little more history with Princo and 7 Arts Music. In November 2012, David Michery resigned from the board of directors, with the company's net loss increasing from $982,000 up to $1.35 million. But then I came across this, and on Investors Hub, this is what's written, and yes, this is talking about the same man. There is a link here, and I've included this in the description below, so check that out. If this is not a big enough red flag, this is just the tip of the iceberg. Looking on Benzinga, we can see that on November 18th, less than 2 weeks after going public, while the share price was at its peak, he disposed of 750,000 shares and another 48,000 between January and December before being awarded 1 million shares by the company at no cost later in January. Now, just to be clear, I have nothing against management of any company being awarded shares. But I do have a huge issue with disposals of shares as soon as a company goes public, for obvious reasons. Now maybe there's a very good explanation for this, but I don't see it. Now if it sounds like I'm being very bearish on this company, it is for very good reason. During my research, all the positives that I have found are very hopeful in many ways, wishful, whereas the negatives are unbelievably blatantly obvious. For example, on February 17th, Mullen anticipates delivery of the first ever cargo van fleet vehicles in Q2 2022. So this is brilliant, right? This is good news. Then this. The company is unaware of any business reason for the current decline of the Mullen stock price. This comment is absolutely stunning. On December 31st, Mullen had 17 million shares outstanding, and we can see this here from the SEC filing, their Q10. On the 14th of February, less than a month ago, but on the 31st of January, only 2 weeks previous, Mullen Automotive filed the prospectus to dilute the company by 228 million shares. Now there is delusion and there is this. This is on another level altogether. To put this into perspective, if you owned the entire 17 million shares on December 31st, think that would only account for 6.9% of the entire shares after this equity offer. And somehow Mullen have the balls to release a statement saying that they do not know of any reason for the share price dropping. Massive red flag, guys. This is absolutely huge. Guys, if you appreciate this type of analysis and the work involved here, and want to support my work to bring you the most honest assessments possible, please hit the like button and check out my Patreon, where I warned about Mullen stock during the week. You can see some of my other posts here, such as Flowtech, that despite initially dropping has gained over 30% this week. Illis has gained over 50 since my post. By the way, I had originally called Illis on here at only 5 cents last year, and Attica Mining gained over 12 in the past month. You can join the Patreon group for as little as 3.50 a month, and this will really help me grow my channel. Keep in mind that these gains are coming at a time when most of the stock market is red, nearly every single day. But the reason for the equity offering is equally as bad. Look at the company's balance sheet. The balance sheet is a statement of a company's health. They have assets of $45 million and liabilities of $55 million. Not only does this give equity of minus $10 million, but they have $360 in cash. Not 360 million, not 360 to $360. Without this equity offering, they're going bankrupt. Looking at the income statement, they have losses of $36 million for 3 months. 36 million for 3 months. And guys, the majority of this is general and admin expenses. This is not 36 million being spent on manufacturing. This is 36 million being spent on, as the notes say, professional fees, salaries, rent, repairs, maintenance, utility, office expenses, employee benefits, depreciation, advertising and marketing, settlements and penalties, taxes and licenses, and even worse, in my opinion, is just below this 45% of Mullen's research and development expense consists of costs associated with the development of the Mullen 5 show car. That's just one car. $500,000 to produce just the one for the LA Auto Show. By the way, with the dilution, they will raise about $200 million. But look at the losses. That dilution, that $200 million, would only last about 6 quarters or a year and a half at the current level. That does not even take into account the cost of manufacturing these vehicles. So guys, what do you realistically think about Mullen Automotive? Do you agree or disagree with my analysis? Or are you happy to gamble on this stock and hope for the best? I usually don't do this type of video, but I felt that this needed to be said. Too many YouTube channels are saying that this is going to go to $5. when I think it's going to go the opposite direction. The last time I made a video like this to warn investors was back in April 2021, when OZC's stock was 12 cents, and I seen the same type of lies being spread about that stock, that it was going to 10x. OZ Energy Solutions dropped below 2 cents last week, over 80% down from when I made my warning video. Yet that was the video that got the most dislikes I have ever seen on the channel. That one video got more dislikes than every other video that I have made combined. Drop me a comment and let me know what you really think. Remember to show your support for the channel and hit the like button. And if you're new, consider subscribing, and I'll catch you in the next update.